Good morning. Once again, this is James from the Wall Street Minute. Today I'm standing right in front of the Federal Reserve, just a little north of Wall Street, a little north of the New York Stock Exchange. And yesterday's Fed meeting was pretty much as expected. The Fed said basically the data came in a little hotter than they had anticipated, but they still see that this year, they still see light at the end of the tunnel, where this year they're still looking at three interest rate cuts by the end of the year. So the New York's the market seemed to love that. I think there was a little concern. I still think there's a lot of people out there fantasizing that the Fed is going to readopt the zero interest rate policy, which is just not going to happen. It's ridiculous. Anyway, what do I think about the whole thing? I think the economy is in way better shape than a lot of people have thought it would be at this point in the game. I think we're doing somewhat like in the 1970s, where you have certain areas that get very slow, sort of like what they called rolling recessions, sort of rolling mini recessions inside the economy. I think so clearly some sectors are going to be very adversely affected by higher interest rates, as well as the inability to find qualified workers. But I do think there's a lot of opportunity out there. I'm a little cautious right now, or have been since the beginning of the year, because the first week we were down, which is usually a bad sign. It is an election year, so usually that's a good sign. It means they're going to do anything to get the market going up. But also in the short run, we're getting near that big tax day, and usually there's a little selling right before tax time. People take some profits and to pay their taxes, basically. Anyway, this is James once again from the Wall Street Minute, standing right in front of the Federal Reserve. Say hello, leave comments, and of course, subscribe to these videos.